Hi everyone, this is MC the Accountant Shares, and this is going to be the second part of our series for installment sales method or installment sales discussions. Now, in the previous session, I told you about the background of when can we use installment sales. We said that this is a deviation of PFRS 15 and that we are going to apply this one if, for example, there would be uncertainty as to the collectibility or collectability of the installment sales. So this is going to be a reasonable uncertainty as to the collectibility of such. Anyway, so this is the continuation. Last time I told you also some concepts about the computations, right? So we said that deferred gross profit is the difference between sales and cost of sales. Realized gross profit is simply to be obtained by multiplying the gross profit rate by the collections. So the formula, let me take a look at it again. Okay, it's here. All right. And then, all right, so this is the computation of how do we compute realized gross profit. So as what I've said, that is going to be all collections, including down payment and the installment coming from, or installments coming from the accounts receivable. That's going to be the total multiplied by the gross profit rate at 40%, and that's going to be the realized gross profit. The gross profit rate based on sales, which is our assumption, should be equal to gross profit or deferred gross profit divided by sales. So that's how we obtain 40%. To continue, what if there are two periods or more, especially for installment sales in which the contract would last for 2 or more years? So in that case, guys, what we are going to do is that we have to be careful for the dates. So the assumption is that normally there would be changes of gross profit rates as we go along the way. So we do not expect that in 20x1 the gross profit is 40% and 20x2 that's going to be the same for another installment sale, because take note that the installment sales could be contract per contract basis. Good thing if the company is having a policy that the rates would be the same, but that's not going to be the case because sometimes it is going to be based on sales. On the other end, it could be, or it's going to be based on cost. So anyway, careful on the dates. So here we are given the items on both 20x1 and 20x2, and the requirement is to compute the total realized gross profit in the second year. So what is going to be clear here is that for 20x1, whatever is the gross profit rate, that will be used for computation of the realized gross profit in 20x2. For 20x2, respect the rate for that year, and that will be used all throughout the years for the 20x2 installment sales. So that's why in the computation here to compute gross profit rate, that is whatever is the gross profit, it's given here by the way, but we will never know if this is not going to be given. So 400,000 divided by 1 million is 40%, and 540,000 divided by 1,200,000 is 45%. And so to compute the realized gross profit, the cash collections are given. For 20x2, that's 200,000, and this is coming from 20x1 sales. So 200,000 times 40% is 80,000. And the collections for 20x2 sales in the year 20x2, 480,000 times 45%, that's 216,000. So that the total realized gross profit would be 296,000. So the lesson there is that we have again to respect the gross profit dates on the different dates. All right. So this is without regular sales. Take note, these are all installment sales. Because remember in the previous session, I've discussed that the gross profit for regular sales composed of both cash and credit or account sales would be the realized gross profit of them. So no deferral, unlike for installment sales with unreasonable cert, I mean, sorry, with reasonable uncertainty rather. Okay, so reasonable uncertainty. All right, so meaning there is a reasonable concern about the collectibility of the receivables in the future time. Okay, so to continue, normally these are all pertaining to installment sales because it's possible, by the way, that even if we have installment sales, but there is no reasonable uncertainty. So in that particular case, what we are going to do is that we will be applying still IFRS 15. Okay, so here are the given items on January 1, 20x3 for illustration 3. So you have 20x1, 20x2, both receivables and deferred gross profit. And then we also have the balances before adjustments for RGP. So meaning these are the unadjusted balances of receivables and deferred gross profit on different years. And a certain information on 20x3 that were made at 33 and 1/3 above cost for the installment sales. Take note, this is above cost. All right. So for the first one, compute for the installment sale in 20x3, we are given the 750,000 deferred gross profit in 20x3. So we can divide that by the GPR, gross profit rate based on sales. So how do we convert the GPR based on cost to become based on sales? All we have to do is 33 and 1/3 over 133 and 1/3 with percent or without percent. What's the reason? Because the percentage on the numerator and in the denominator could be eliminated based on mathematics. So that's why I said it could be with or without percentages. So 750,000 divided by, this is like what? This could be 750 divided by 0.4 is, what is that? For a while, 1/3 divided by, so that could be 25%. Let's check. Okay, so 750 divided by 25%, which is the result of this one, equals 3 million. Okay, so hopefully our calculators are ready here. All right. Then what else? Cash collections. That's requirement 2. We have to compute the cash collection. So how do we do that? Remember, the collections would be the difference between the receivables that we have at the beginning minus the receivables at the end. So the difference is what we have collected. We are given the receivables at the beginning, and these are the unadjusted balances of those receivables. So what we can do is that for 20x1, that is 0 at the end. So 400,000 minus 0 is 400,000, right? It's here. For 20x2, that's 1,200,000 minus 480,000 pesos. That's for 20x2 collection in the year 20x3. And then for the 20x3 sales in the year 20x3, that's going to be whatever is the installment sale, which is 3 million, minus the balance of the receivable, which is 1,200,000. That is 1,800,000. Forgive me, guys, if the mouse is somehow like moving back and forth. So hopefully you're still following. All right, so bottom line, cash collections is simply the difference between the receivable at the beginning and receivable at the end. If the receivable decreased, meaning we've collected a portion of that, which is normal, right? Because in business, we have to collect, otherwise we won't have cash available for our operations. So that's 2,920,000. And then there's an alternative way using T account. So we all know that receivables have normal balances on the debit side because they are assets. And then we are given the ending balances. So the difference would be the collections. This is, by the way, without any discounts, sales discounts for that matter, without sales returns and allowances, written off accounts, or defaulted accounts for reposition. So they will be discussed as we get there or go there. Okay, so what about requirement C, that is total realized gross profit? Since there are 3 years and we are already able to compute the collections, so whatever will be the collections multiplied by the gross profit rates. The gross profit rate in 20x3 is given. Remember, we have converted this one into 25%. But for the years 20x1 and 20x2, not yet. So how do we compute? If we are talking about previous year's sales or receivables, or previous year, if there's only 1 year, we can compute the gross profit rate simply by dividing the deferred gross profit by the installment receivable that is available. So this is applicable again for previous year's sales. But for the current year sale or installment sale, what we can do is go back to our basic concept or computation, that is gross profit rate divided by the installment sale is going to be the gross profit rate based on sales. Okay, so we have here 88 over 400 in thousands and 288 over 1,200. Okay, so you have here 22% and 24% respectively. All right, and then 25% here for the installment sale on 20x3. We can also verify this one by dividing 750 by 3 million. In thousand, by the way, for 750. So that's going to be 25%. We can just verify, because what I did a while ago was I used this one, I simplified, and I got 25%. But using our formula that we learned from previous session, 750 divided by 3,000, let's check. So that's 25%, and it's here. So this is how we convert gross profit or GPR, or the rate based on cost, by the 100% plus that rate, and we will get gross profit rate based on sales. So we can now compute our realized gross profit in total for 20x3 for the 3-year sales. So we multiply the collections here, collections, by the gross profit rates respectively, so that we will get a total of 710,800. Okay, so that is for illustration 3. All right, so hopefully you got the points. Next, illustration 4. For illustration 4, we are going to compute still the realized gross profit in 20x3. Now, by the question alone, we can already determine that what we are going to obtain would be the collections times the rate. The rate is gross profit rate. However, if we answer problems, we normally also make use of the formulas based on what is given on the problem. So meaning we have to be intelligent answerers of questions. Anyway, you can also observe that when I answer the questions or analyze them, I began with the requirement. I did not read the problem or any given. I went straight or immediately to the requirement, so that in my mind, I will be able to know the details needed for me to solve the problem. All right. Although this gets easier with experience. So as for me, I've been in the profession for many years. That's why I can think about it immediately. All right. So the given items are DGP, that's prior to adjustments, and the ending balance of receivables. Now remember, The methods of computing the receivables, realized gross profit, and even the deferred gross profit would be two. So I label them as method one and method two. Method one is what we have used so far, collections multiplied by the gross profit rates. Another method is deferred gross profit beginning minus the deferred gross profit ending is the realized gross profit. Remember, deferred gross profit is the profit is rather profit that is yet deferred or being stated as liability for the meantime, and then it will be transferred to income as soon as there are collections. So that's the reason that when we compare the difference between the deferred gross profit beginning and the ending, then that is because of the realization of such. Okay, so that is why when we computed for this problem, you can see here how it was computed. That is simply DGP beginning minus the DGP. When I say DGP, I mean deferred gross profit. We have to know also the acronyms because when there are discussions and solutions and problems, normally those lengthy words or terms are being used into or being converted into acronyms so that it would be easy for us to analyze and understand. So you have here 1,126,000 less the installment receivables. So you have here given 480,000 times 24%, that's given GPR for the year 20x2 that is based on sales, while in 20x3 that's based on costs. So what we can do is to convert such to be based on sales so that it would become 33 and 1/3 over 133 and 1/3 with or without percentages, and we will get 25%. All right. So that the realized gross profit is 710,800. Oh, it's like having the same answer here. The reason is because of perhaps the author wanted to connect the two problems. Anyway, nice way of showing the computations. Anyway, for a while, guys. Basta delay. Okay, so illustration 5, this is reconstruction of information of installment sale. So for this one, when you say reconstruction, there would be missing items in the problems in question marks. And the requirement is to compute for the total realized gross profit in 20x2. As said, whatever the rates prior to that date, we have to pay respect to such to be used in the computation for realized gross profit in the next years. So 600,000 less the receivable 400,000 in the year 20x2 for the year 20x1 is going to be the collections. You can say it here. So 20x1, this is the receivable. And then at the end of 20x2, this is the receivable. So as said, the difference between the receivables would be the collections. That is again without respect to sales returns and allowances or sales discount or accounts written off or defaulted accounts. Take note, I use the term without respect, meaning that is if they're not given. That's the simplest way of stating it. If they're not given, so meaning the difference of these two items would simply be the collections. But if they're not actually, for example, shown in the problem, so in that case, please apply the concept that such would be the collections. All right. And then if they are given in the problem, so that only means there would be other ways of computing such. And we will see more problems as we go along the way in the next types or examples of problems or illustrations in this particular topic. I hope that is clear. And then also important point on being careful about the given items. So we should know also the dates and their relationships with each other that there is on the receivables, for example. All right, so you have here, and then multiplied by 40%, that's going to be 80,000 pesos. Okay, so what about for the year 20x2? The installment sales in the year 20x2 or in the current year would also be the installment receivable balance. Why is that? The entry here would be debit installment accounts receivable. Problem is silent, no promissory note. So installment accounts receivable. If this is with promissory note, so it would be installment notes receivable. So that is at how much? It's not stated here, but we can compute. We are given the cost of sales, 660,000, and the gross profit rate based on sales is 45%. We will really assume that installment sales is at 100%. If that is the basis, which is here based on sales. 100% minus 45%, that's 55%. So 660,000 divided by 55%, that is going to be the sales, 1,200,000 minus the receivable in 20x2, 720,000. That is our collections. The decrease of the account is the collection, 480,000. Multiplied by 45%, that's 216,000. So this would be the total realized gross profit in 20x2, 296,000 pesos. Hopefully that is clear. So what's the lesson in this problem? The lesson in this problem is that for reconstruction, there could be some missing items, but for as long as if we know the formulas and we can know the relationships of the accounts and we can work around with the formulas, still we can get the answers right. Okay, so this is also another reconstruction of information. There are missing items. You can notice here with the requirements, we have to get the balances of installment receivables on the year 20x2, which is the second year, and the installment sales. So let's look at the given DGP, GPR, and the cash collections. So for the balances of installment AR, what we can do is that we have to analyze the given items. If you can notice with the previous problems, I can just spot immediately as to how do we compute, because it's like the common questions being asked. As for this one, this could be a common question or less common for that matter. However, the given items are not that commonly presented. Anyway, so for the balances of installment receivables, we are given here the DGP ending and it's adjusted. So meaning this is after the realization, which is based on collections. So if we are going to, for example, add back the realized gross profit from DGP, we're going to get the DGP beginning. And if we divide that DGP beginning to the rates available, so we will get, for example, the installment accounts receivable at the beginning. So just stating that, because there might be a question that will be asked later on. However, for this one, it's just the balance of ending in 20x2. So what we can do is we can just divide the DGP at the end of 20x2 by the rates. So 160,000 divided by 40%, okay? And that's going to be 400,000. Should we add the collections so far? So what is asked, by the way, that's B. Okay, so for the A, 160,000 divided by 40%, that's 400,000. Okay, that's correct. And then if we would like to get the sale in 20x2, so we can just add that back to become what is to add back is the collections, which is the sum here, 400,000 and 200,000, the collections in 2 years, we get 1 million pesos. Okay, that's true though. And then what about in 20x2 sales? So 24,000 divided by 45%, that's 720,000 plus 480,000. If you can notice, it's zero here because this is 20x2. So for sure, the collections in 20x2 will be in that year and after. That's why for 20x1, if you're asked in 20x2, we have to go back to 20x1. Since this collection is in 20x2 and there was or were collection or collections prior to that. So that's why we have to go back in time if we have previous year's installment sales. Okay, so going back to the questions, requirements, compute for the balances of installment receivables. That's 400,000 for 20x1 installment sale in the year 20x2. And then installment receivable in 20x2 for the year 20x2 sale, 720,000. Okay, so these are the two answers for A. B, compute for installment sales in 20x1 and 20x2. Installment sales for 20x1 is this, 1 million. In 20x2, that's 1,200,000. All right. Anyway, so for A and B, there could be two answers. If this is like a problem that will be asked from you, so there would be two answers for every requirement. Another one, this is still reconstruction. Let's check. Okay, so we will stop here prior to present value. Okay, I'm just running down, guys, so that we will be inspired because we might be taking longer time in our video. So illustration 7, you have here still reconstruction of information, and there are a lot of question marks, especially in 20x3, in which installment sales is not there. Anyway, so question is compute for cost of sales. All right. There is installment sales for 20x1 as well as in 20x2 there is. 20x3, it's not given as said. And then you have here gross profit rates, collections. Okay, realized gross profit is also given. And then you have here the realized gross profit. Well, for the realized gross profit, remember that's going to be a total of the realized gross profits coming from 2 years and this year based on collections. Good thing collections are given here. So if we multiply the rates, the GPR rates with the given collections, we will get the realized gross profits for those years. And when you add, or when we add, we will get this one. But first, we need to get the rates in 20x1 and 20x2. All right, so in 20x1, good thing we are given with the realized gross profit, and we are given also with the collections. So 220,000 divided by 1 million, that's 22%. Okay, we are correct. For 20x2, we are given the realized gross profit total in 20x3. So 400,000 multiplied by 22%, that's 88,000. For 20x3, in the year 20x3 sales, this is, by the way, for this one, the 20x1 sale, of course, is based on the 20x1 sale here for realized gross profit is the collection of the 20x1 sale in the year 20x3. And that is going to be the basis for computing the realized gross profit. So here, that's 22%. 22% multiplied by 400,000 is 88,000. And then for the 20x2 sale collections in the year 20x3, it's not given yet, And then what we can do is that it's going to be squeezed. So there is a term in accounting which is squeeze, in which we're going to get the figures in between. It's like squeezing the juice of a lemon for us to make lemonade. That's the concept. So getting the figures in between, all right, or working back method for mathematics or other ways of saying it. All right. So for the year 20x2 collections in the year 20x3, it's not given. In the year 20x3 for the year 20x3 sales, so you have here 450,000. So how do we compute that? There is gross profit rate of 25% multiplied by 20x3 sales, 1,800,000. And so that's how we obtain 450,000. And if we squeeze now, so 710,800 minus these two, we will get 172,800. That's the realized gross profit in 20x3 from 20x2 sales. Should we divide this one by collections of 720,000 in the year 20x2, that's 24%. So we are now able to get the GPR actually in those 3 years. And we are asked how much is cost of sales in 20x2, being able to get 24% of GPR, knowing that installment sales is 100%, if that is the basis, minus 24, that's 76%. If we multiply 2,400,000 multiplied by 76%, that's 1,824,000. Okay. So we can also be asked even like how much would be the cost of sales also in 20x1. Yeah, we can also do that. So 2 million times 22%. What about in 20x3? For 20x3, if we have here the collections, 1/8, we don't have the receivable. So we cannot work back about it for the installment sales unless there is DGP beginning. Okay, anyway, so that is how we compute for reconstruction of information. Next, illustration 8, deferred gross profit. So it's given on the requirement to compute the total. We are given the installment sales in 2 years, the cost of sales. So by these two items in the two columns, you can compute the GPR, gross profit rates. Then deferred gross profit is based on receivables. As what I've emphasized, the realized gross profit is directly proportional in terms of the GPR or gross profit rate based on collection, while the DGP or deferred gross profit is directly proportional to the receivables with respect to the GPR. So you have here getting the GPR, so it's just gross profit divided by the installment sale, or deferred gross profit divided by installment sale. We get 40% for 20x1 and 45% for 20x2. And then for getting the total deferred gross profit, that is installment receivables in the 2 years multiplied by the gross profit rates. So 1 million times 400,000, that's going to be 600,000 minus 200,000 further. So these are the two collections for 20x1 sales in the 2 years respectively. So this is not cost of sales, by the way. These are the collections in the 2 years. So 400,000 times 40%, 160,000. While for 20x2 sale in the year 20x2 also at the end of the year, December 31, 20x2. So you have here 1,200,000 minus 480,000, and that is 720,000 times 45% equals 324,000, so that the total is 484,000. That is total deferred gross profit. We can also compute here, or this can be asked in the problem, that how much is the realized gross profit. In that case, you are given the collections. If you multiply, or if we multiply such with the rates, you will get the realized gross profit. So for 20x1, realized gross profit in the year 20x2, that's going to be 200,000 times 40%, that's 80,000. For 20x2, 480,000 times 45%, that is how much? Let's compute. 480,000 times 0.45. Oh, 216,000. The previous one was 80. So 80 plus 216, that's 296,000 realized gross profit. Am I correct? That's review. That's 200 times 0.4, that's 80,000 in thousands, by the way. And 480,000 times 0.45, that's 216,000. All right. These are now the learning points in illustration 8. Next, illustration 9. That's cash collection. The requirement is to compute for the realized gross profits in each of the 3 years, 20x1, 20x2, and 20x3. So let's study the given. Oh, this is quite a unique one because the policy of collection is that there's down payment, and for the 80%, we are going to apply the following percentages for collections. 50% in the year of sale, second year or after that, that's 30%, and next year, the third year is 20%. And these are the installment sales. So compute realized gross profit. Therefore, we are going to make use of the collections. Compute the collections first. We multiply such with a given gross profit rate that is already based on sales. And that's how we are going to get the realized gross profits. Okay, so this is quite a long method in which you have, for example, 1,200,000 in the year 20x1. Down payment is 20%. That's part of the collection. So 1, 2 times 0.2, it's here, as well as for the next, 2 years. Next 2 years. For the 3 years, you have here the 20% down payment. So they will be affected because what is asked in the problem is the total realized gross profits in each of the years. So just remember though that the 20x1 will have impact in 20x2 and 20x3. 20x2 will have impact in 20x3. All right. And since we ended at 20x3, so 20x3 will only have impact in that year. Okay. So for 20x1, the 80% will be collected as well as for the second and third year, but they will differ on the percentages. So for 20x1, what will be collected will be 50% of that 80%, right? Okay, so for the 20x1, 50% of 80%, the 30% will be 20x2, 20% will be 20x3. That's why you have here the 3 items. For 20x2, for the first year, of course, no impact. But there will be impact in that year sale 20x2 and the 20x3. So 50% of the 80% in 20x2 and 30% in 20x3. And for the 20x3 sale, 50% of that 80% will be in 20x3. And we cut from there. So we get the total collections. You have the down payment plus the collections of the balances for the 3 years respectively, and we multiply with the gross profit rates. It might look easy or easier. However, this might be challenging, most especially if we will not be given the privilege to construct the table. So what if what will be asked will be the second year? So it's really going to be playing in the mind, but you can write the solutions. Like for 20x2, we know that the down payment will be made in that year. 50% will be in the year of sales. So meaning for 20x2, it will be composed of 2 years collection. So that would be for first, it will be collection for that year sales. So that is 20% of 1,500,000. That's 300,000. And then for that year sale, 1,500,000, that is 50% of the 80%. So why is it 80%? Because again, the 20% has already been paid. That's the down payment. So 50% of the 80%, that is at 600,000. 1.5 times 80, that could be 1.2 M times 50%, that's 600,000. And then collection of the balance from 20x1, because remember in 20x1 sale or sales, 20% was down payment in the previous year. 50% of the 80% was collected last year. So in this year, that is 30% of the 80%. And that's why we got 288,000. And we get the total collections 300,000, 288,000, and 600,000 times 40%. We get this realized gross profit because it's not going to be like all the time the three will be asked. It's possible that only 20x3 or 20x1 or 20x2 or a portion here, like how much would be the collections in 20x1, 2, or 3. All right, so that ends our discussion or session for today about illustrative problems of installment sales with 2 or more years with reconstruction of information. Present value will be discussed in the next sessions. And I do hope that you learned something for today. I'm still using, by the way, the Book of Milan. So thank you very much for your book. This is not my book, by the way. So I'm just discussing, I'm just sharing my insights about the topics so that it will be easier for the learners and for everybody who is interested with accounting. And I do hope that you enjoyed, you learned something again. You are going to share this with people whom you have known who will learn something from this, who will appreciate accounting more. And don't forget to subscribe to my channel, to like the video. You can comment or request for other videos. Then I'll see you next time for the next sessions. Bye, guys. Oh, for a while. Okay, so see you, by the way, in the next series or part